Are experiencing a mixed trading session with the major US indices showing notable declines, with the US and the Latin American markets remaining in the positive territory. The Dow Jones Industrial Average has dropped 260.32 points, that is a minus 0.62%, reflecting investor concern over the economic data, interest rate or the geopolitical uncertainties. The broader S&P 500 is down to 60.46 points, that is a minus 1.07%, while the tech-heavy Nasdaq is facing some significant hit, also plunging to 0.56, that is 304.55 points. The sell-off in the technology stock suggests that investors may be rotating out on the high growth sectors, possibly due to rising bond yields or concerns about the overvaluation. Small cap stocks are also under pressure, as indicated by the Russell 2000 decline of 18.40 points, that is minus 0.89%, which concludes and also gives signal of the broader weakness in the riskier assets. On the other hand, market volatility is on the rise, as reflected by the VIX index, which jumped 5.80% to reach 21.70. This spike indicates also the increased uncertainty as traders hedge against the political downside risk. In Canada, the equities are also in the negative territory, with the S&P TSX Composite down 279.04 points and the S&P TSX 60 declining 5.31 points, that is a minus 0.36%. The Canadian market weakness might be influenced by the fluctuation in commodity prices or sector-specific concerns. However, the Latin America markets appear to be showing relative strength. Brazil's Bovespa index has gained 640.77 points, that is a 0.49% hike, indicating resilience in the region's largest economy. Meanwhile, Mexico's S&P BMV IPC is also performing well, rising 289 points, suggesting that the investor may be looking at emerging markets for opportunity amid global uncertainties. Child's S&P IPSA, however, is down to 16.21 points, that is a 0.21% decline, indicating some weakness in the Chilean market. Overall, the market sentiment remains cautious, with investors digesting economic data, corporate earnings, the macroeconomic development. The divergence between the North and the South American market suggests that while developed economies may be facing headwinds, some emerging markets continue to attract investment. Traders will likely keep an eye up coming economic reports and on central bank policies and geopolitical events that also could influence market directions in the coming days. The commodity market is seeing mixed movement, with the energy prices slightly declining while the metals and agriculture products are showing varied trends. The WTI crude oil down to $0.20 to reach $66 per barrel, while the Brent crude oil had dropped $0.21 to reach at $69.91 per barrel. This minor decline is the crude oil of the price that reflects concern over the global demand, production level or geopolitical developments. However, natural gas is showing some strength, rising $0.03 to reach $4.08, potentially due to seasonal demand or supply adjustments. Precious metals are experiencing slight declines, with the gold down at 0.205% to reach $3,038. Though this is still higher end of the 52 weeks range, silver has now dipped by $0.19 to reach $34, possibly due to a stronger US dollar or profit taking by investors. Despite these minor losses, precious metals remain an attractive hedge against inflation and economic uncertainty. The current movement in the commodity market highlights the ongoing volatility driven by the macroeconomic factors and investor sentiment. The decline in crude oil prices suggest that concerns over the global demand, potentially supply increases, or the geopolitical uncertainties are weighing on the energy sector. With the WTI and the Brent crude oil both down to 0.30%, traders may be reacting to shift in production levels from major oil producing nations or a potential slowdown in the global economic growth. However, the rise in the natural gas prices indicate a possible seasonal demand boost or supply chain adjustment, signaling a contrast with the energy markets. In the agriculture sector, the modest rise in the soybean prices suggests stable demands despite market fluctuations. As global investors continue to assess inflation, trends, interest rate policies, and geopolitical risk, the commodities market is likely to remain dynamic with further price movement expected in the coming sessions.